I always like to focus on high growth companies here, but one of my favorite flavors to target are those companies that are continually able to reinvent themselves. You always want innovators that keep striving for more, even after they've brought the world the next big thing, because the next big thing is often temporary. Remember pause? Hi, I'm Matthew Carr, Chief Trend Strategist at the Action Club. Thank you for watching this episode of Market Trends. If you're new here, be sure to hit that subscribe button and turn on notifications so you never miss out on my best trading ideas, which I share here each and every week. So there was a time when a Garmin GPS was a must-have for drivers. It was an ingenious product that replaced obnoxious foldable maps, if any of you remember those. They were in such high demand, they were even targeted by thieves. I remember a time when car windows were regularly smashed in at mall parking lots, particularly during the holidays, so that GPS devices could be stolen. These events made regular appearances on police blotters. Now, during this era, Garmin enjoyed a glorious run. Revenue exploded 240% from $1 billion in 2005 to $3.4 billion in 2008. And shares of Garmin launched skyward, hitting an all-time high of $125 in September 2007. But the company's fast fortunes faded quickly as it faced its stiffest competition ever. Apple introduced the iPhone in 2007. This redefined everything. From that point forward, smartphones became the norm, and the need for a portable GPS device, an in-car GPS system, let alone a foldable map, completely vanished overnight. Smartphones were cheaper and offered a full suite of other functions we would view as trivial or downright useless on a GPS, like playing games or watching Netflix. And Wall Street's outlook for GPS makers at that time was grim. Garmin was declared dead back in 2009 and 2010. But the experts were wrong. Garmin wasn't dead or dying. It was evolving, as great growth companies do, and found new ways to capitalize on its iconic GPS product. And this is a transition that investors can still profit from today. You see, 5 years ago, almost 30% of the company's revenue came from its automotive segment. By 2018, these products brought in $635 million in sales, for a little less than 19% of total revenue. And last year, 2020, Garmin's automotive segment accounted for a mere 11% of sales. But as the need for automotive GPS continues to dwindle, the demand for new products, adventure watches, fish finders, fitness trackers, and airplane navigation have all soared. From 2018 to 2020, Garmin's fitness tracker sales grew 53.5% to $1.3 billion. Its sales of outdoor products like adventure watches jumped 39.3% to $1.12 billion. And today, shares of Garmin are setting new all-time highs because of this. In fact, they've outpaced the NASDAQ and the S&P 500 by a wide margin. That's due to the fact the company is taking advantage of its new markets, and these are markets that continue to grow. So if we look at the first quarter, Garmin's revenue grew 25% to just over $1 billion. This was led by a 38% increase in fitness tracker sales to $308 million and a 46% jump in its outdoor product, including those adventure watches and golf trackers, to $256.5 million. Not to mention, fish finders and chart plotters for boats leapt 28% to $209.4 million. And here's the come full circle moment for the company. Garmin's fish finders are so in demand, they're now being targeted for theft at marinas. In fact, just recently, thieves stole $50,000 worth of Garmin fish finders in one night down in Southwest Florida. But Garmin represents the perfect type of opportunity that I always like to target here. It's an innovator. It's experiencing high growth, and it always has its sights on these new markets. In the coming weeks, Garmin will report second quarter earnings on July 28th before the opening bell. Expectations are for a 27.7% increase in revenue to $1.1 billion, with earnings surging 38.5% to $1.26 per share. I actually think that Garmin will probably beat that. Shares of Garmin are hitting new highs, but I believe there are still new highs ahead as demand for fitness trackers, outdoor watches, adventure watches, and fish finders continue to soar. So these are shares I think investors should pay attention to before the company reports earnings at the end of this month. Well, I'm Matthew Carr, Chief Trend Strategist at the Action Club. Thank you for watching this episode of Market Trends. For more information like this, be sure to go down to the description and sign up for my free e-letter. Until next time, here's to high returns.